With Bitcoin and the crypto market seemingly struggling once again, no surprise, everything turned red on the back of a pretty solid day. The question is, why are people still optimistic? Is there anything left that we can look at as a potential catalyst in this market? Well, in this video, I'm going to break down one of those big catalysts, liquidity. We'll talk about what it is, where it's going to come from, and more importantly, how this is going to affect the wider cryptocurrency market. So if you want to stay ahead of everyone else in this game, hit the like button, hit the subscribe button. Let's get into it. So as we all know, one big thing that is looming over the US and in particular the US economy is the government shutdown. As this now enters its 37th and 38th day, the fact is it is costing the economy billions and billions of dollars every single day this is closed down. That's not even for the data that we're getting through or just getting people paid. I think the important reference here, 675,000 people are not getting a paycheck as every single day goes by. Now, we did get some pretty interesting data that came out around MacroEdge, which basically told us the number of job cuts that we have. So we've obviously talked about the ADP data yesterday, which was kind of optimistic, 42,000 jobs put back in, but recent job cuts hit a whopping 155,000 job cuts for the month of October, the biggest we have seen since last year. In fact, since 2023. Now, the markets clearly did not like it. This is kind of showing the US potentially is heading forward for a jobs recession, which definitely won't be bad news. The fact is now the Fed almost has to turn hawkish. Year to date, layoffs are now above 1 million people, the highest yearly since the 2020 pandemic. And this, well, will create the Fed to have to move. The reality is they will probably drop rates. We could even get that 50 basis points in December. Now, we know Stephen Mirren was talking today, as well as 2 other Fed governors, all advocating for a rate cut in December. This could be supportive of the cryptocurrency market. Now, one of the other things to reference here is the TGA that we've been discussing a lot on this channel. The reality is this has now flipped over $1 trillion. But the fact is that when you look at the TGA and you look at quantitative tightening ending, this is a liquidity positive moment. In fact, the TGA December cash balance target is around 850 billion. The reality is we are over that right now. And assumptions would be made that some of this capital will flow into risk assets, the same as we'd expect it to flow into the S&P 500 and everything else, including equities, derivatives, and much more. So the reality is there is a significant amount of money. And when this government opens, the floodgates will begin to empty. And the reality is this account is going to come down pretty significantly, as we've seen a number of times before. The last time we saw the massive move down from the TGA was, guess when? 2021. And we all know what that particular bull market looked like. But one of the big things we need to get is the government shutdown. So the debate now is, how close is that? Well, we know that today, or yesterday, Hakeem Jeffries and Chuck Schumer did send a message to Donald Trump asking for a meeting to end the GOP government shutdown. So this could be a sign that potentially we could even get this later today. Polymarket giving their predictions right now that, look, the most favored assumption would be November the 16th onwards as a potential end to this. Like I said, though, 12th to 15th also looking pretty optimistic. So given the fact that we're definitely going to see an injection of liquidity, how else can we see this? And more importantly, what is going to give us that boost in the market? Well, here is another one. Short-term holders are selling their bags at a loss. Now, you all know, as well as I do, that when you sell at a loss, you are itching to get back into the market. You're wanting to get those gains back. It's human nature. That means that all of these short-term capitulations where they're selling at a loss could absolutely come flowing back into the market when sentiment returns, when macroeconomic looks better. The reality is that these people that are selling so early and at a loss will be probably the first ones back into the market. Think about it. We saw exactly the same play out back in 2023 and exactly the same in July 2024. The biggest short-term holdings selling off, followed by a massive rally in the market. This is absolutely aligned to the demand and accumulated address. Why 375,000 Bitcoin being purchased not only by whale accounts, ETFs, investment funds, pushing this number, by the way, from 130,000 well above 262, showing there is an accelerating demand as short-term holders sell, long-term holders continue to accumulate their bag. And you can even see this in terms of on-chain trader realized price and profit margin and loss. The reality is right now that we've always rebounded when traders realized losses fell below 12%. Guess what? We're at negative 11, signaling that potential rebound coming soon. Think about it. Short-term holders are selling, whales are buying. It is only a slight change in the dial before everything turns macro once again. And even JP Morgan have moved on their Bitcoin price, predicting that we could even see 170,000 within the next 6 to 12 months. They're not the only one. We actually got Cathie Wood revising their 2030 price prediction now just to 1.2 million versus 1.5 million because of stablecoins. And interesting, when we talk about stablecoins, guess what? The supply of stablecoins continues to increase. Circle minting more USDC. And actually, when you look at Wintermute's data, we can see stablecoins in November already are actually the highest they have been in terms of circulation, followed by the ATF and DAT NAV as well. So actually, what can we say? Well, stablecoin ETFs and DATs have grown from 180 billion to 560 billion since early 2024. Capital is rotating internally, not entering fresh, and that is the catalyst we need. How do you enter new liquidity into the market? You drop rates, you make money easier to get hold of, you make debt less manageable, more manageable, and then what happens? Risk assets generally get some optimism. Double that down, by the way, today. Obviously, the wider markets took a pull down. Think of this, the 30-year treasury dropping over 1.2%. This is once again another good indication risk assets may be about to move. So what's the summary right now? Yes, there are still some cautionary things we need to keep an eye on. For example, we need to keep an eye on the repo debt. We need to keep an eye on the actual price. We need to keep an eye on some of those macro sentiments within the market. But liquidity drives Bitcoin and liquidity drives the crypto market. Inject liquidity, price, well, should and has done in the past go up. And this is what I'm looking at right now. Hold key supports, look for brand new liquidity, look for rotation of liquidity. Cryptocurrency, I think we're going up again. Let me know what you think of all of that in the comments, as always, down below. And don't forget, please leave a like on the video. It massively helps out and supports me in my journey to, well, try and do this full time. So I really appreciate it. As always, thanks so much for watching, and I'll see you in the next one. Bye-bye.